What's going on, traders? Welcome to Investing Trends, where we talk about the latest news and trades on trending stocks. Ark's favorite stock, Tesla, is down 10% this week, and it is teetering in the $600 price level. In this video, I will go through Ark's new $3,000 price target for Tesla, and then show you the spreadsheet that tracks the daily trades of Ark Invest ETF on a consolidated basis. So this week, Cathie Wood released a new price target for Tesla, which is $3,000 per share by the year 2025. Tesla is currently trading around the $600 price point, so if Cathie Wood is right, then if you invested now, it will give you a 5x return by 2025. Before I dive in, I want to say that I am a fan of Cathie Wood for their transparency. I am an investor in Tesla and am bullish on it, but will try to remain unbiased as much as possible, since that is what investors should do in analyzing investment opportunities. It starts off by saying that last year, Ark estimated that in 2024, Tesla's share price would hit $7,000 per share, or $1,400 adjusted for its 5-to-1 stock split. Now, they estimate that it could approach $3,000 in 2025. They used Monte Carlo to do their simulation, considering 34 input variables and 40,000 possible simulations, and here are the results. 3 results are shown: expected case, bear case, and bull case. Basically, Ark's base case, low, and high cases here. Ark's worst case scenario is $1,500 price target. Remember that today it is trading around $600, so their low case will still yield you about 2.5x return in 4 years. That's pretty solid. And when looking at this, I honestly don't really care too much about their expected case and bull case. Rather, I am more interested on the worst case scenario, their bear case scenarios, just to see what their assumptions are and if that makes sense to me. And when their bear case is still giving me a 2.5x return in 4 years, I would say this is a very good opportunity to invest. So let's dive in and check it out. Here they go a bit more granular and show you which categories they've considered. They are looking at the electric vehicle revenue, insurance revenue, human-driven ride-hail revenue, the autonomous ride-hail revenue. And you can't just read these numbers and stop here, but this is the time for you to put on your investing hat and wonder, think about and determine whether these assumptions make sense to you. It doesn't matter what others say, it is what you believe, since you are building your own conviction. What I think about when looking at this is, okay, I'll just check out their bear case, since 2.5x return is not bad at all, and anything above that is sweet gravy. Key drivers here is number of cars sold. So they are saying 0.5 in 2020, and they think 5 million cars in 2025. Is that realistic? For Tesla to grow 10 times in 4 years. Okay, let's take a look at how many cars are being sold globally. And in 2020, 64 million units of cars were sold. So that means that Tesla needs to do 10% of the total market share of cars sold by 2025. This is the bear case. Do you believe they can do that? Another thing I'm confused here is their average selling price assumption. Although the selling price goes down for both bear case and bull case, the fact that the bear case selling price of $45,000 is higher than the bull case of $36,000 boggles my mind. This is not real bear case. I consider a true bear case if they assumed at most $36,000 for the bear case as well, or maybe even lower. In addition, they're saying insurance revenue to be $23 billion and human-driven ride-hail revenue to be $42 billion. Note that they're not adding any revenue for the full autonomous ride-hail revenue. So $23 billion from insurance revenue is 10% of the EV revenue, and $42 billion from the ride-hail revenue is 20% of the EV revenue. 10 and 20%. Are these realistic numbers? I think the 10% insurance revenue is much more achievable than the 20% ride-hail revenue. Cathie has been talking about this ride-hail service and revenue since 2017, and Tesla has not shown any progress on this yet, so this estimation is concerning. Given the drivers and the assumptions, here are the share price targets. They break down the key assumptions further down. Again, they show you that they are estimating 40% of cars sold into human-driven ride-hail service in their bear case. I think this is too high for it to be a bear case, and see how their bull case is the same 40%? Definitely too high. Don't just take the numbers they give you as is, but as an investor, you need to think about it and determine on your own if it is possible. As I am curious about their insurance revenue angle, let's take a closer look in this paragraph. It says that currently it is only available in California. Ark believes that in the next few years, Tesla can roll it out into other states and underwrite its own insurance policies. Here is a key benchmark to their assumptions. So Progressive's EBIT margin is 13%, but Ark is saying that Tesla's EBIT margin can reach 40%. I'm not too sure about this, guys. 40% is quite a jump compared to its comparables. Here's a chart that is easy to read and inviting to the eye. I like the parabolic trend up at the end over here. As an investor, I really hope this is the case. These pie charts here are what we discussed earlier about the percentage of revenue coming from different revenue channels. Again, Robotaxi takes a large pie of the total revenue. And this piece at the end is pretty neat where they uploaded their model on GitHub. If you are a coder, then you can play around with the assumptions. I haven't seen any other large active institutional fund doing this. And this level of transparency is why I really enjoy following Ark Invest. So going through this analysis, what do you think of Ark Invest's price prediction of $3,000 by 2025? As a long-term investor, I hope this is the case and really wish that the bull case happens by 2025, but I'm a little bit less convinced looking at the key assumptions and the drivers of Tesla's model and the report. That being said, here are the daily trades of Ark Invest ETFs on a consolidated basis. The market, largely the growth stocks have been struggling given the current environment, and ARKK is struggling with the ETF being down 8% this week, down 15% for the month, down the same 15% in 3 months, and up 155% in a year. Not much change in Ark Invest trading strategy this week. We still see buying of shares in Teladoc Health and Zoom, while selling of shares in CRISPR Therapeutics and Invitae. Remember how I published a video suspecting that Invitae was a pump and dump? Well, Ark has yet to show they are buying shares of Invitae, even when the stock is down 17% this week. Investors in 2U, PagerDuty, and Adidas Medicine should be wary that Ark Invest has been selling their shares aggressively and consistently. Plus, we see Cathie buying the dip on Skillz stock. Huge buying this week as she bought 2.2 million shares, or more than 50% of their holdings. The stock is down 28% for the week and 43% in a month, so it is a good time to buy the dip on the stock. Going down the list, large selling of Facebook and Taiwan Semiconductor. Overall for the week, the top 2 purchases by Ark Invest was Skillz and Pinduoduo. The top 2 sells for the week were Amazon and Taiwan Semiconductor. Well, that's it for this video. Hope going through the key drivers of Tesla's new $3,000 price target, along with the daily trades of Ark Invest, gives you more confidence in the stocks you're holding or new stock ideas to buy. Let this be a guide to your investing needs and long-term investing to reach financial freedom. Please invest safely, subscribe to the channel, and hit that like button. I thank you, appreciate you, and see you next time.